Hey guys, Mike here. So you might have noticed that we were up nicely this morning and the market did an about face and started heading down very abruptly. And there was two things happened back to back, which I'm going to show you. And the first one had to do with Jamie Dimon. And I can't prove this, but I'm pretty sure he was standing backstage at a conference before he went out and said what he said. Probably standing next to his assistant holding his phone and looked at that person and said, "You want to see a magic trick? I'm going to show you how to make money disappear just like that by using my words." And that's pretty much what he did.
It's a hurricane. Right now it's kind of sunny. Things are doing fine. Everyone thinks the Fed can handle this. That hurricane is right out there down the road coming our way. We just don't know if it's a minor one or Superstorm Sandy or Sandy or Andrew or something like that. And you better brace yourself.
And as you can see, within 30 minutes of that, boom, down almost 2% right there. And then as the market tries to recover, here comes another interview by Fed President Daly out of San Francisco. And she goes on to say this.
So a couple 50s in the summertime, it sounds like you could go ahead and do another 50 in September on your way to 2.5 for the end of the year.
I certainly am comfortable to do what it takes to get inflation trending down to the level we need it to be. I really think these high inflation numbers have been going on too long, and consumers and businesses, everyday Americans are depending on us to get inflation back down and bridling it. And so the reason I'm not forecasting beyond the next couple of meetings is because I don't know what else the data are going to give us. We've seen financial conditions tighten. We've seen some early leading indicators that say that there's slowing in growth numbers, but we aren't really there yet. So we need to continue to see those data on a slowing economy, bringing demand and supply back in balance. And I need to see some real progress on inflation. Otherwise, I would think we just move the rate until we find ourselves at least at neutral, and then we look around and see what else needs to be done.
Let's talk about beyond neutral here and whether or not you think the Fed has to go there. There was obviously some talk in the last minutes about going beyond neutral. Where do you stand on that? There are some people out there who say, it's not crazy to think about a 4 or 5% funds rate because it ought to be positive to begin with, a 2 or 3% inflation rate, and then you may have to get restrictive. How do you come down on that?
So I absolutely am open to pulling the reins back on the economy after we've removed the accommodation, but it's too early in my judgment to proclaim that we're going to do one thing or another because we still have other things that are unfolding. I mean, I mentioned China already. China literally just reopened. That we needed to persist in its opening so that we get supply chain some relief. We also need to see what happens with the war in Ukraine and how much energy and food supplies really can come back in balance with the demand there. And I need to see more progress on getting demand growth back in line with supply that we have. So I'm looking for both supply to recover somewhat and demand to come back down a little bit. If neither of those things cooperate, then we need to go into restrictive territory because ultimately we have a goal of price stability and full employment, and we're not at our price stability goal.
And what you end up with is close to a 3% turnaround there on a dime in less than almost an hour. And so as you can see, the market's trying to recover as I'm putting this out right now. And don't forget to hit that like and subscribe button, guys, if you get something out of this. And what Jamie Dimon is basically talking about is understand the Fed is starting to roll off their balance sheet, right? Their $9 trillion balance sheet. And this starts usually officially on June 15th, but they're going to start selling around $47.5 billion worth of treasuries and mortgage-backed securities each month for 3 months. And then after that, it'll go up somewhere around $95 billion in September and roughly about $3 trillion over the next 3 years. And so this is literally just like having extra rate hikes, okay, because it's going to dry up liquidity in the market. And the other thing Jamie Dimon is talking about, because remember he is the CEO of a financial institution, is that analysts' cuts of global earnings forecasts outweigh upgrades, right? You can see the right there. You can see used to back in the day, boy, in December, January of 2021, look at all those upgrades. And then you look at what's going on now, right? A lot of downgrades, especially globally, because everybody has these huge fears of everything slowing, especially in China. As China gets a cold, everybody else sneezes, right? Same thing with America. There's no guarantee this is going to happen, but everybody's trying to be a lot more cautious now. And so just real quick, want to put this out there and let you know what happened. I'll have a much more detailed video later on tonight with these kind of concerns, what's happening, a lot of data that's come out that I think made him actually come out and say this right here. But, manipulation at its best, right? Let me go ahead and use my power to swing the markets up or down. It must be nice. And so anyway, hope you guys come out of it. Hit the like and subscribe button if you did, and I'll see you guys later.